what you got in store for them today.
Hello. Hey, thank you, Scott. Hello, Andy in Texas.
Hey, Steve. Hey, Scott. Hi, everybody.
All right. Well, we took off last week because we were all in transit. Or actually, no, we were in a meeting last week. It's not very often. Well, it's only once a year, actually. In fact, that we do get everybody at Trade Ideas physically together in the same room. It's always fun. So that means we suffer a little bit on some of the content and the normal things we have for you guys, but the week went by fast, and here we are. So we'll get back in line with the Tuesday webinar, which is the trade of the week, and some other stuff. Just a reminder, we are not registered investment advisors. We're not licensed brokers. So anything we talk about is really just our own opinion and should be treated as such. Trade Ideas itself is a software as a subscription company. But we're going to talk about a few names, a few things today. Just bottom line is none of it should be construed as personal investment advice for you or financial advice. If you need that official advice, you got to go pay the people that charge you a fee. We don't charge a fee here. All right, so moving on. If you're new, we're not. We've been here 17 years now, Trade Ideas. And a lot has happened over those 17 years, but the result is a very rich product, a platform to scan stocks in real time. We've added a lot of new things since I was the first user, and so was Andy. And so it's not easy to learn overnight. So we do a few things. We'll talk about the test drive coming up, which is a great way for people to kick the tires and use the product and see if it's right for them. But for those that decided to take a month subscription or even longer, we have a lot of options for you to try and get up to speed quickly. Primarily these webinars that we're doing right now, but for the most part, Barry's room here is a free live trading room, and free is a great price, especially when you consider he's probably got about 400 people in there a day, and a lot of good traders at that. So great value just for the pack hunting that they have going on in there, but also the ability to ask Barry questions. You can pull up a chair and ask him a question. He'll demo stuff for you all the time, especially later in the day as things start to slow down. So there's that. There's the afternoon webinars as we discussed. We have our Friday support session. Let's back up. Friday support session is 2 hours on Friday, 11 to 2 Eastern, 11 to 1 Eastern. I'll have to fix that slide. And it's anything that you guys want to talk about. So say you subscribe on a Tuesday or Wednesday, you're going to have some questions probably by Friday. Perfect time to come in and log in and let us demonstrate the question for you live and get you going again. So another way in which you try and really help the learning curve steepen for you. And then Monday through Thursday, we have the TI University, which for now is still live. We did a live one today. We'll do a live tomorrow and Thursday, getting into the more deeper stuff like back testing and things like that. Soon to come, more of this type of stuff on Brokerage Plus, because we realize that Brokerage Plus auto trading and paper trading is kind of our new tool. So we will definitely have some more support in the future for that tool as well. All right, so enough with the pre-canned stuff that we always talk about. Just taking a glance over at our attendees. A little bit lighter than usual, not sure why. Not a big deal. Like Scott said, we do record these, and I think a lot of people do grab the recorded version, maybe with their favorite beverage. Now they might be heading home still. So here we are. The theme, of course, man and machine combined. Just a reminder that technology is going to work hand in hand with humans. We can't turn our back on technology and let it do everything for us. I mean, we've got to keep some sort of a semblance over it. And that's really what Trade Ideas does, is it organizes the giant fire hose that's the market, giant fire hose of data, and really helps parse through and find only the things that we want to look at. And that's really what the future is going to hold for AI and machine learning. There's going to be people that still require jobs, but the jobs are going to be monitoring the AI data sets. And that's what we do as a trader. We're just going to be monitoring the AI data sets or monitoring the custom scans that we created, or whatever, but the technology is curating the giant whirlwind of data and giving it to it and presenting us in a way in which we can quantify it, have ease of use, and make more sense of it to make ultimately better decisions. So that's the theme of the week as usual. Reminder, typical content formula, I guess you'd say. I'll go over some market action. We've got some thoughts on the market recap. Kind of a slow day in the AI, but once again, Neo proves you just got to be patient with that thing. Trade of the week, Peloton out of the gate like a maniac today, but reversed. Got some thoughts on that and some thoughts on how to manage last week since we weren't here. Not going to hide from a trade that hasn't worked well, but Tyson Foods is making things very difficult. Today was an exit for sure. And then I want to talk, Dan really wants to help set the tone again this year because this is really going to be an interesting year. We're talking with a lot of big names out there and brokerage type names. And a lot of them, the big brokerage names, are really interested that we have this unique paper trading tool. And it's going to really help differentiate, I think, the brokers in the new space out there as they try to compete with services and whiz-bang type stuff because they no longer can compete on price. As we all know, the new price in the new paradigm per trade is 0.0. And Andy, how rich would you and I be right now, really, over 20 years of trading? We had started out of the gate paying this in commissions. I mean,
I know.
Rich might not be the right word, but wealthy, fat,
yes,
happy.
I actually calculated it. I calculated it in one of my webinars, and it just made me sick.
Okay, we'll just leave it at that.
Okay.
So if you're coming into the game, there's a different environment. You have the algos to deal with, which we didn't have when we first started. That makes it a little tricky, but if you're just coming into the game, you've got zero commissions. You now have the number one expense of a trader who treats their trading as a business, as you should. It's not a casino, it's a business. And your number one expense has just been wrapped up and thrown out the window and set at a fixed cost of 0.00 each month. So that allows for you as a trader to do a couple other things. Invest in more tools. Yes, we like that. Invest in more tools. But also, really take the time to learn how to manipulate or maneuver, I should say, this market in a different, not a different perspective, but in a way in which there's no commissions to worry about. We can really try and work on that. So market recap, AI recap, paper trading, and why. And then we'll go through some scans and set some alerts. I got to tell you, there's not very many because it will probably just dovetail right into what we're going to talk about here. This is kind of our sentiment indicator for the market right now. Just not happy, not sad, just kind of watching to see. It's been a pretty good run. And let's just stop talking about it and take a look at the actual data. We'll come back to that. All right. We put on the S&P and expand it a little bit here. I think some of you guys who've been around for a little while know I start to get personally a little nervous when we have all this white space in between our momentum line and our price action. It doesn't seem like it takes long. Great example back here. Great example here as to what happens when the price action gets a little too far above that that momentum line. You start to get scenarios like this, and whether they're big, deeper pullbacks or just little mini corrections, that's just kind of what I see when I look at a chart that's having a beautiful trend. And again, as I do every week, there's just really nothing wrong. You can say with that little snapshot right there, all your moving averages are lined up perfectly, except we just got a little too far ahead of ourselves. So the market is a jump rope when we're just trending so simple like this. It almost can seem too easy sometimes if you've got a good month going. And by a good month going, I mean you're waiting in the lurches for days like this, where just beautiful setups start to reset themselves, holding a base like that and moving higher. If you're not having a good month, that's okay. It's subjective. It's not science. But back to the term at hand here, we're getting a little ahead of ourselves. And I got to say, there's a little notion in the back of our mind, and Andy knows where we're going with this. We've been around long enough. We've seen enough Januaries. We've seen enough Januaries that come out of a good December. And we've seen the complacent market that just kind of lures people into the buy side. And then you get a black swan, like, I don't know, maybe some crazy flu-like thing that's seeming to find its way over here in our country now. That's in the news today. I think there was a bit of a hiccup. Matter of fact, let's just take a look at that. This little hiccup in the midday, all I could find really was a little bit of nervousness about this new coronavirus, I think, was found in Washington State, and it's been a problem over in Asia right now, big problem. So, when markets get this complacent, we talk about waiting for the black swan. I kind of poke fun at the shorts a lot of times, saying if you're short this market, you need to have your head examined, because basically you're just waiting for the black swan event to come, which eventually will come, but we just don't know when or what or how bad. So, back to the notion, here we are in our third week in January. We've seen it before where you just, hey, let's just keep the good times rolling, come out of December and just keep on rolling, and all of a sudden something happens. We've seen it. You can't predict it. I'm not trying to predict it. I'm just saying I'm on watch for it. And I will tell you the little fund that Andy and Jamie and Michael and myself trade in, and it's kind of a neat little fun because you've got 4 perspectives hitting the button on a live account, and it kind of evens things out. It's pretty cool. But we're all a little cautious right now, and so even that in itself is kind of an interesting tell. The blotter is very thin right now, and I would even say it's hedged. So if there is a downturn, the 4 of us aren't really going to care. We'll just keep it at that. So let's look at the Qs, because these are the ones that are leading the way. Pretty much same thing going on over there. The Qs, the NASDAQ have been about as buoyant as you can be, but still, we're due for a possible little couple-day correction. Who knows? No bear case to be made. Right now, you're just wishing for a correction. I will say this, though, and I don't have this indicator up here. It's called the RSI, or Relative Strength Index, and Michael has been learning a lot of cool stuff in his CMT endeavors. And actually, one of the first technical indicator setups that I fell in love with was what you call bearish divergence. And what that means is if you've got like an RSI indicator here, it kind of comes up on that high of the price action, comes down, and then the price action goes back to new high, but the oscillator, the relative strength, doesn't. So you get this sloping downward action as opposed to the diametrical upside price action. So you get what's called divergence. And when you have this, and again, I just drew this, when it breaks, it can break hard. And I learned this early on in trading commodities in the futures market. You had big wild moves, and I was able to catch a couple of those. I read about it in the book, and it was great. But the problem was I spent the next 3 years just focused on only that. And the long story short, there's many different ways to approach the market. So little back of the corner feelings is what I'm getting here. Andy, myself, and Michael and Jamie are all kind of feeling that we're a little bit hedged in our account. Feel like there's just something out there that could just be a correction. In other words, we don't want to go piling into 100% leveraged margin up here in brand new opening positions. We're just not feeling that. Here's something that I'm not also feeling. It's the damn IWM. This thing just can't get out of its own way. I really thought we had a really nice move here last week. But it looks like we're going to come back and maybe reset the needle again. I don't know, but this thing is about as stubborn as they get, because it's still trying to get back to its prior highs, which the other indexes have long since disposed of. So really lagging. Again, my 401k is a little bit more heavier weighted than it should be right now, but in the smaller caps. So I'm waiting for Superman to come here and make that happen. So that's really it in terms of the big market. I don't know, gold had a horrible open, but it was buoyant today. Silver, same thing. Pause was an interesting silver stock. It's been doing well. I don't know where we go from here. We'll just see what happens. It just seems like, as Andy likes to put it, I'll end on this before I bring him in. The air is a little thin up here, and it just seems like every time the market climbers get up here in the thin air, they get a little woozy and dizzy, and only a certain few things go. Before you know it, you've got a little bit of a pullback, and your stock didn't even go with the rest of them. So it's kind of hit or miss up here at these levels. I prefer a nice washout of the market where we can hit a reset button on a lot of things. I'm not seeing a whole lot up here at these levels. So if you want to come in and add anything, Andy.
No, I totally agree with you, Steve. When it gets up to these levels, is usually the point when I start getting out of pretty much all my longs. I just don't feel like the risk reward is there, and if I have some nice gains, I just feel like it's time to take it, and maybe even I would say I'm net short right now. So, and I agree with you. I did a segment on divergence, RSI divergence, in my last webinar, and I'm seeing it, and Apple has some major RSI divergence going on right now. See there.
Yep, I'm drawing it for you.
Yep, thank you. Yeah, and you know, you can kind of see them in the spies and Qs as well, not as pronounced as Apple and some of the others I'm seeing.
Let's take a
But
look since I teased him
yep,
with it.
sure.
Not so much there in the Qs.
Nope.
That's Monsterland.
Well, you'd have to put the. I noticed you didn't put the. I'm not sure what.
I don't know which one I popped in there.
Yeah, you probably want to go with
Let's
the 14. Yeah, you got it on a 30, so just
Okay.
put it on 14. There you go. Maybe
So
show a little. That's a little
there
bit
we
better.
go. Ooh, look at
Yeah.
that. Okay, so
Mhm.
here's a little bit of slight
Yep.
divergence in the spiders.
Mhm.
Let's take a look at the Qs. Flat, a slight
Yep.
down bias in the Qs.
But nothing major. Nothing like you see in Apple. Put back up Apple
That
again.
was going to be extremely obvious
Yeah.
now.
Look at that.
The faster period you just had me change to.
Mhm.
So there is your bearish divergence. And when these break, look at that, it's almost a head and shoulders. When these break, they can break quick and they can wipe out days and weeks before you even know what happened.
Yeah.
Same thing happens on the downside. There's a couple of interesting charts that Michael was looking at. I think Vonage was one of them. The downside, what we're doing, let's just play that. Perfect. So back here, look at this. Vonage trying to make new lows down here, but RSI was having none of it. That is your bullish divergence.
Yep.
Okay. Michael's
Take
actually going to be. Go ahead.
Take a look at Beyond too. I talked about that one in our last webinar last week. It's a beautiful one too. Look at that, going all the way back to November.
Just banging on the floor with nowhere to go, but
Meanwhile,
the momentum was kind of traveling upwards. Yep. Interesting.
now Steve's right. You got to be careful. You know, like you said, you cannot assume just because you have this divergence, you're going to get the price action in the direct. And it's a lot of times it can be a nice little kind of indicator, you know, to let you know that, hey, you know, this may be. It's great for reversals when they work, but you know, it doesn't. We all know that nothing's certain when it comes to trading stocks. So, but it's a nice little tool to use.
I think I deleted one of my indicators.
I think it was an RSI. Yeah.
I think I deleted my 10 period too.
Uh-oh.
I gotta have that.
Well, I'll tell you what. I will take the reins here because I don't have anything to add. Yeah. And you can fix it while I'm doing my Holly recap.
All right.
All right. All right. What I'm going to focus on today, guys, is and Steve has kind of been doing the same thing, even though some days Holly AI and Holly 2.0 will outperform. Holly Neo, over the last couple of months, Neo has been beating the other two pretty handily. And we're really getting into the heart of earnings season. We got a lot of earnings coming up. So I think it'd behoove you to focus on this Holly Neo. And the reason that being is because it looks for relative volume, okay? Just look at some of these today, MGM, relative volume for, okay, LAKE, relative volume was way up there at 86. So these are gonna be stocks that are in play, and we all know that earnings are definitely considered in play items, you know, when they have earnings the night before or the morning, so you can catch a lot of good earnings announcements in this Neo. So I am going to be focusing on Neo in the coming months or the coming 6 weeks or something like that. Steve will be doing the same thing. Most of us here at Trade Ideas will be looking at Neo because the last earnings season it did. Lamont asked, please explain difference in the Hollies. Well, basically, just in a nutshell, the more you go down, probably the more volatility they become, more volatile they become. So Holly AI is probably going to be the most tame. You're going to probably have some different risk parameters in Holly 2.0. And then Holly Neo is going to be the ones where you're going to find a lot more volatility because it's going to have you know, probably news behind it, whether it be earnings or an announcement or something like that. You're going to see, let's take a look at, I don't see one on Lake, so that was probably news today in Lake. And you can see that was probably news in MGM. I didn't look today, but the earnings is not till February 12th. Let me pull this down a little bit. Now you can see it there, February 12th. But I can promise you this, you're going to see a lot. Yeah. Probably being Monday, there wasn't a lot of, obviously, I'm sorry, a holiday on Monday. We didn't have any earnings last night. Okay, so a lot of these are probably just news oriented. But trust me, with earnings season, you're going to see a lot more in here. And Lamont, to answer your question, this is going to be more volatile, but I think it's going to provide a lot more potential reward for you, you know, with taking on that risk. So real quickly today, and really the 7.0 and 11, you know, it was 17 trades. Holly 2.0 finished up marginally. Holly AI finished down, looks like a pretty good amount there based upon 100 shares per trade. But Holly Neo, even though, let's see, it's only showing $43 up on here. Once again, that's based upon 100 shares. If you took 100 shares of every stock, whereas the way I'm calculating it, it's based upon a $200 stop loss. So in other words, every one of these comes with a stop. Every time Holly, like in this LL this morning, when it alerted you right here at 80.50, it gave you a stop at 80.99, okay? So what I have my settings set up to, if it goes to that stop, I'm going to lose $200. I have a $200 stop loss, or based upon the stop loss. So that being said, I thought it was interesting today, and this is why, guys, I like to tell people, you know, in the first 15, 20 minutes, kind of maybe just be careful. I mean, you may miss something, but I think overall, if you kind of wait and turn Holly on maybe a little later in the day, maybe after 15 or 20 minutes, I think if you're paper trading, go ahead and check it out. Go ahead and trade it with it on at the early hours and when the market bell rings, and see for yourself. And that's the beautiful thing about our paper trader. You guys can turn this on in the paper trader once it's available. It's going to be available for the test drive. I know right now you probably can't do it, but on February 3rd, it's going to be available on the test drive. And then hopefully going forward, the plan is for you, anybody with premium will have the ability to auto trade Holly in our paper trader.
A good moment to point out, you know, the email header, I believe, you know, mentioned, do you know when not to trade? And Andy just stumbled into it. The first 10, 15 minutes of the day is it. And the paper trader can be a great tool to kind of show you that as well. Also, exactly. the Neo, like he said, doesn't even begin to trigger until 5 minutes after. And even the ones that trigger at 10 minutes after are oftentimes very difficult, you know, to reach up and grab the momentum. So there's nothing good really that happens. I'll just say it now. When you're trying to make, and here's the bottom line, when you're trying to make swing trading decisions, which usually means your entry or the intraday management of your trade, which we'll talk about in a minute, or the exit of your trade, you really have to throw those first 10, 15 minutes out, because that's where all the noise is. And once that plays itself through, you start to get a much better semblance of price action.
Exactly. Exactly. And one last thing I wanted to show you guys, I have this sorted by time, and you can see the early entries down here. Boy, they didn't pan out very well.
Very interesting.
Well, let me tell you.
I really prefer the pullback and the bounce shorts, because you've let the craziness spill out of the way. There's two strategies in Neo, you know, pullback long and pullback short.
I don't know if I'd go that far, because especially in this Neo, some of these are going to really work because they're based upon stocks doing momentum and volume, and a lot of that momentum will continue. But what I'm saying is, as you're paper trading these, you take note of the first early minutes, and if you find yourself, you know, constantly in losing trades and there's a lot of too much volatility for you, just wait 15 or 20 minutes before you cut it on. Then you're going to start catching some of these pullback shorts, pullback longs. So once the paper trader is going to be, the simulator we call it, is going to be available for all who have premium. it's to your advantage to, you know, test it out for a month or two and see what's worked, see what's working for you, because it's a great tool and you need to put it to use. But other than that, you know, pretty okay day for Holly. You can see here if I do by conservative profit, this MGM was a really sweet one. And here's one that you probably could have waited, you know, a few hours, and finally it's, you know, setting up this kind of range, and then it breaks down the side, and boy, some nice you know, alpha there to be had in the closing 3 hours of the day. Whereas this first one out of the gate this morning, this TCOM, the first 5 minutes, there's a short and bounce, just, you know, caught you right off the bat. And you can see right here too, there was a little bit of resistance here coming up as it did bounce there, going back to this low and then highs over here. So so anyway, Steve, yeah, I just kind of wanted to focus on NEO today because I know NEO is probably going to be providing a lot of opportunity in the coming weeks ahead just because of the earnings.
Sure. Bill says in the first few minutes, I often look for the reversal on Holly trades gone bad. Oh, interesting. That's not a bad. I should say, flip the trade. Basically, it can happen. There's all sorts of ideas that can be generated from these entries. That's for sure. And like Andy says, and I say, we only want to focus on the NEO because that's where the action is. All right, I've got one more thought. I'll take it over and kind of tie it all together. I don't know if anybody was in the 201 Trade Ideas University I had today, but we were talking about NEO. We were talking about the AI today, and I had a comment. I said, you know, this thing is a closer. If you're going to the horse track, it doesn't look that great on the back stretch sometimes, but by the end of the day, NEO is a closer. And I said, you know, we were down here, we're doing the 201, and I said, you know, I wouldn't be surprised, guys, if by the end of the day it goes from red to green. And sure enough, it did it again. So I don't know if anybody was in there, but that's what we were talking about. And here we are at the end of the day. I said there's a reason that NEO has these time stops, these all-day holds. Not interested in getting out midday. We've got volume, we have relative volume, so we're trying to milk these things as long as possible. And it's also another testament as to why the moderate mode, this was actually conservative mode today, but moderate mode a lot of times is doing better than conservative mode because of the thought of holding it to the end of the day. So I just thought that was a great visual because I said, hold on, everybody, the day's not over yet, and NEO kind of brought it home there. All right, so where we go from here, trade of the week, we'll just talk about Piton. All right, so this was one that at one point was on our AI list, but quite honestly, it was more really kind of kicked around by some of the traders that we saw. And the real nuts and bolts of this, one, it's a new issue. There's a lot of kind of hype around it, and new issues can move pretty quickly. But when I saw a wedge basically, and I saw 1, 2, 3 days of closure outside of that wedge. I talk about that a lot. We want to see the price not tickle at midday, then close below, or not give us one day, then drop back into the range the next day. No, it gave us 3 solid closing days going into the weekend. And dare I say, it even kind of had that look, and I've talked about it in the past, the train is leaving the station look. Let me just go back one day. There we go, perfect. Where it just isn't pulling back, and the lows kind of get higher, and the highs kind of creep higher, and it looks like it's trying to like wait for you to not be looking before it takes off. Well, that's kind of what happened this morning. So I'm glad that it took off on this morning. It gave everybody a good chance to see what can happen. But one more thing we've also talked about a lot. Let's go back to the bigger picture here. Just, I think 2 weeks ago, we started playing around with this faster 10 period cut in half to a faster 5 period to try and maybe gauge when some of these super turbo stocks are not are ready to even move higher. So when I drop in that 5 period moving average on Piton, it really was kind of holding as well and pushing it higher. That was an observation. There was another one, SDC. I think we were looking at that one. Oh, actually closed lower. Disregard that. So back to Piton. It was on the radar. It was on the jump rope, but it was just mired and stuck in this wedge for so long. And then the 3 days of closure. Let's go back to my 10 period because that's my default. It was just slowly like trying to get away. Now, on the open, that was awesome. But now that we've closed, we have something a little different to look at here. We've got some bookends. I'll be surprised. Let's say I'll be surprised if we close up much tomorrow. This thing is already kind of showing its personality. A nice spiky bottom tail there, a little bit of a spiky up tail there. Gave us our nice spiky bottom tail there. This is about as defined as you can get with an possible blow off upside tail. Took out that high, but maybe we come back down here into this range. I don't know. We kind of maybe we caught the tail end of that move, but the point being is I'm looking at this candle, and it's not really healthy to give all that back. I was really kind of cheering it on right here as the 10-period moving average caught up for maybe a move higher, but we didn't get it. So what did that tell us? It tells us that the momentum intraday was broken. So for the moment, it's kind of broken, and it's like, you know, you throw something into the air and it's just kind of slowly finding its way back down before it catches again. Where's it going to catch? I don't know. I mean, I'll just look at some basic levels, you know, maybe something like that. Who knows? But the point being is the downside risk, as it was pointed out in the email, was essentially to not allow it to close below the 20, where did it say? Yeah, 2950. Basically 2950 is what we don't want to see. 2950 is all the way down here. So got a little bit of ahead of itself, but down here, I think that's kind of the safe zone. If this thing comes back down to here, it basically means that the price action is not ready. What we need to see is a continued hold above that wedge that I drew. And as long as we have continued days that trade above that wedge, maybe this is, you know, another 3 or 4 or 5 day hold. But the point being is we've had a nice move off that low down here, 1, 2, 3, 4, 5. I was focusing on the last 4 days here. Really shouldn't give much of this back, in my opinion. Maybe tomorrow proves me wrong and moves higher, but that's a pretty good blow-off wick right there. And so I think the sellers are a bit in control here for just a little bit. Stock kind of got ahead of itself, and we'll see what happens. But nonetheless, this was one of those rare events where there really wasn't a trigger that you could see on here. So the actual buy point in the email, if you read it, was just get in and start pedaling. And that was, yeah. So as long as it hangs above that wedge and hangs above 29.50, I think it's going to be okay. It may give us a little bit of trouble tomorrow, but we'll see. Now, last week we weren't able to talk about the Tyson trade, and it was a frustrating trade because it moved higher, gave us one really nice day. Let's do it this way. There we go. Trade was active right there, gave us a nice green day, and then decided to reverse. Well, a bit of mea culpa. I actually added to, or maybe even sold and bought back right here on this day. If you remember that arrow said, do not let the price close below. And here's a great example of why we're going to talk about not wanting to trade. And there's 3 days back. 1, 2, 3. All right, let's go and take a look at this day. So where did this day give us all of our trouble here at the 50-period moving average? And this is why I also say wait for the price to close, because it did it on the open. And this is what exactly we were talking about. That first 15-minute candle was where the noise came down and pierced that level, looking to take out these lows and run some stops. The stops were not run. So I have to say that this day got back in, or I shouldn't say I got back in. I think I added to it right about here because it looked like the worst part was behind us. Was definitely happy to see that. But then when it closed roughly as a kind of a spinning top there on this day right here, no harm, no foul. You know, maybe it was going to be one of those cases where it's a fake out and the first mouse doesn't get the cheese, but the second mouse gets the cheese, as long as, again, the risk management was to keep the price action not closing below the 50-day moving average. Well, what happened the very next day? Very next day is we got another little test, more of a midday test actually. I didn't like that. I had my finger on the button right here because this right here was actually resting right on the 50. And I remember thinking my thought process, if I sell this thing right here, it's resting right on that 50. If it bounces back up, I'm going to feel so foolish because it didn't close. I always say let it close below. If it had rolled over and closed like that, would have been out right there. But it didn't. Stayed alive into today, which unfortunately showed its hand pretty darn quickly. And so once it basically took out that line in the sand, as I said, I had my finger on, the sell button right there, and pretty much told myself if it takes out that level, I'm out. So I got out of this trade down here roughly below that orange line, and it turned out to be a good exit. Not a great trade all in all, but a good probably lesson to go back and look at trade management and see what to do as things happen. So the big lesson here is these 2 days, the price flirted with that 50-period moving average, but bounced back into play. Every single time I will keep that trade and take it home the next night. But once it showed that it didn't want to play ball anymore and took out that low, no, there was no reason to even try and stick around. I'm not going to play 3 days in a row. I like to play this game maybe 1 day, 2 days at the most. Third day, forget it. We're not going to stick around to see it closes above. So those are my thoughts on how that one kind of played out and how to play the ones when they don't work, because they are not all going to work. They're not all going to be as nice as Peloton coming right out of the gate, even though it gave us some craziness on the close. All right, so let's take a look at time. We're doing okay. I think paper trading is what I wanted to talk about again. And again, this is going to be kind of a big year for Trade Ideas, because we're offering a service to companies like E-Trade that's going to really help keep their users sticky, keep their accounts open, keep them from coming in and blowing up their accounts and being their own worst enemies. I don't know if Chris Varley's in here today. He's probably working. But Chris comes in a lot, and he's been doing it right. He is getting ready. He just funded and opened his interactive brokerage account, and he's chatting about it on Twitter with me, and he's ready to go. And I said, oh, you've been paper trading, right? He said, oh yeah, I've been paper trading. I've been testing my scan. He's taking it really slow, and that's the point I'm trying to make here. There's really no better analogy to trading than golf. For you golfers that know, every hole's a new hole, every trade's a new trade. Play with games won between the ears, all that stuff. But another big metaphor for golf is, what do you do when you're trying to get better at golf? You just don't go out there and start hacking around and putting your score down. You go to the practice range. That's what the paper trading module is. So very soon, right now, everybody has access to the paper trading module. And here's why it's really unique. Not a lot of companies have this thing to play around with. Why? Because you've got live data in here. Live data costs money, and the freemium services out there and FinViz, they're not just going to turn you loose with live data and turn these kind of things on for you. That costs money, and so for those users of Trade Ideas, your live data is built into your subscription. So it became a no-brainer that we could build our own little vertical here of paper trading and kind of keep it in-house and keep the brokers out of it, because paper trading right now is really only attainable through a broker. So a broker is going to want you to open an account. They're going to want to see you got money in that account, and they're going to, tie it to their platform. So this is a nice universal way to come in and start slowly getting a feel for the market, whether it's what Andy said, timing the jump rope to see how deadly and crazy the first 10, 15 minutes of the market really are, or do what Chris Varley is doing and come in and start testing some of his strategies and turning on a strategy and auto trading that. There's many different directions you can go, but the point being is this needs to be first base. This needs to be your first stop. You've got to learn how to crawl before you can walk, and especially talking to people who don't have a whole lot of market experience out there. This is going to be a great tool for you to kind of learn the ropes of the market in real time without risking anything other than the education you're paying, through your Trade Ideas subscription. So there's no reason now that you can't use this. Everybody can go to their new, there it is, B+ right there. Now, you might not be able to come in here and connect to interactive brokers and trade live money. That's a whole different game. What we're saying is, we want to remind you, we've built this second option, Trade Ideas, in-house, simulated trading. It's connected. Now I can come in here and I can, do all this stuff. I can take a look at my my movement here. I could set a stop, adjust it in the chart parameters, and see what my profit and loss might be. By the way, a quick side note here. You'll notice this is a brand new version. We've got this little anchor here in the chart. That's for the Alpha Trends anchored VWAP. So another tool is forthcoming, and that also should be available for the test drive. So we've got a lot of new features to get excited about on this next test drive, whether it's the paper trading module, and like Andy said, it's just a simple switch that gets thrown on for these 2-week live events. And I think even the regular users get to take advantage of that, because it's a universal switch that's thrown. Can you do OCO orders in Brokerage Plus? Andy, what's an OCO order again? open? You have to refresh my memory, John.
Yeah. What is that? Let's see. Order.
Order cancels order. There it is. One cancels other. Yes. The answer is yes.
Yes.
Yeah, we've been trading on this in that little fund I mentioned earlier, and every now and then you'll hear order canceled. That cancels the orders first, and then takes care of the other one at the same time. So yes, that makes it a lot easier. Order cancels order. If you've got a stop out there and you put a limit, or you go ahead and just punch out and click market buy, it'll cancel that stop for you as well. So a lot of cool real life experiences. Another real life experience might be order entry. In this one, 1338 might have been the offer, but by the time the order was filled, 41 is what I got. That's kind of a real world execution. It's not fair to just ping pong the last print around there. So the paper trading is a bit more versed in making it real life simulated. All of the symbols next to upper right corner. Are you talking about these ETFs here, Peter? All these symbols, upper left. All of the symbols next to the heart. Oh, next to the heart.
Yeah, he's
okay,
talking
sure.
about all. Yeah, there you go.
Yeah, okay. So newer version of the newer Trade Ideas charts are coming out. These are kind of just simple hot buttons. I can click that line once, and now I can drop a horizontal line. I can click this line once, and I can create the beginnings of a trend line. I can click the anchored VWAP once, and that will calculate that when that's turned on. So, and then there's a bit of a color pattern we can choose as well. So a little bit easier navigation basically for some of our drawing tools there. There we go. Turn that one off as well. So, back to paper trading, it's just a great simulation, and everybody is going to be able to participate in it. I thought I had one more thought on the benefits of it, but can't think of everything. The test drive, everybody should be able to simulate, and what you would do is you could, just a quick little glance, you would come to the Holly AI during test drive, and what I would do is I would locate the 4 Neo segments, and I would highlight only enable those 4 strategies. So once you've done that before the market open and you've got those set, and we won't spend too much time, but you've edited the trading instructions. If you have a very small account, maybe you only want to risk $30 a trade, that's what you put on there. The stop loss will be based on 30. So order entries, and then you're good to go. You've got those 4 showing on, and then you would just park it here on positions before the bell rings. And I bet you if you have that set up during the test drive, that is about 5-10 minutes after the open, you might start having some positions on here. And from there, you can start pretending, hey, that was a position that was just loaded on there for me. Now it's up to me to manage it, in terms of something like these. Oh God, it's like Andy said, this thing's shorted. Okay, nothing's happening. Now it's happening. So, this right here, I guarantee you, if you put yourself in the place of that was an actual purchase and kind of get your emotions tied into it a little bit and emotionally invested into it, this is going to feel really good when it breaks, because it'll simulate patience, the big P, the biggest thing to overcome is patience and emotions in trading. So let the AI Neo serve up some interesting ideas for you when we get to the test drive, that is, and manage those trades in real time. And there's really not a better tool out there. There's not a lot of companies that are doing it outside of brokerages. So you don't have to open up an account with Schwab or E-Trade, play the whole game of funding a brokerage account to actually come in here and start participating in a paper simulated mode. How do you access the trading room, Peter? That would be on our main website. Just go to our main website, trade-ideas.com, and up on the upper area there, you will see live trading room. So moving on, we usually close out maybe giving a couple ideas. I found a few. I'm not going to go through all the scans at once, but one of them was on the washout bounce, and this is exactly what I would expect the washout bounce to show, and it ties together with what I'd mentioned earlier. Silver and gold kind of had a nice washout today, so I like the way this one looks. I'm going to hand out this one. I'm going to put it right above today's high and create a price alert, and just is what it is. It's a 2 or 3 day hold. If it works, we'll see. Also on the A table here, med, I kind of liked. I think that one's already in there. Nice sideways consolidation above these moving averages. They're all converging, and there might be a showdown here, and a push through there would be an interesting day or two. I also have ENPH from the A table. Dipped down, and it's kind of consolidating. Maybe it takes a day or two, but I would take a move. I would take a move above right there. Just kind of eyeballing that. Now those are 3 longs. One of them that might be defensive play in the AG silver, because if silver and gold get strong, the markets could be weak a little bit. But what I want to do for the remainder is go through them in real time, and I'm going to use history. I'm just going to do 2 weeks of neo history. Time frame only. Go back 2 weeks on all the longs and just see, because this is honestly what I do for trade of the week. So let's get the longs up here. And these things will settle. What a great trade this was if we were watching it back here. But it's not. It's way extended.
Nice one.
What?
Nice one.
Yeah. But the jump rope is at its zenith right now. We're not going to jump into it right now. We're going to get smacked in the head when it comes down. So that one's not ready. This one could be setting up at some point. But these are all interesting buy points in the last 2 weeks. That one pulled back and came back out. Nothing I see there, but it kind of failed. This one could be setting up, possibly waiting for that. Dare I even come in here? I don't know if I'm going to do this, but if I change that 10 to a 5, what does that look like? Nope, it broke it today, so that one's probably not too interesting. But I'll know if I see something. Again, I haven't looked at these yet today. Last time was a few days ago, so if we see something really setting up, we'll find it here. Okay, that's interesting.
No.
The volume is a little shallow. I'm not happy about 400K.
Yeah. And where it came from, like it was where did it come from? Like 50 cents or something?
Oh yeah, Dan really liked this one, but it is setting up. And let's just do this. Let's just have fun with it, and we'll really put a caveat in there. So we'll take a look at. What? Andy doesn't like this at all.
Well, no, but I'm just looking. If you're just looking at yesterday's high, today's high, but
that's what I'm doing. Just a penny above today's high.
Yeah.
What do you mean? I'm just giving.
Shit. I would just say I use that 3-day low as a stop. I want you.
I want to modify the notes in here. I want to remind people that this could be a nasty stock.
Yep.
Mover. Use caution. It's just the way it looks. It's just like a snake flashing us those dirty colors saying, careful, stay away from me. But it's setting up on the numbers, so we'll see what happens. We got to put something in there. All right, that's 1 day wonder. That thing broke. That's rolling over. This is kind of interesting. Kind of like this. Not a lot of volume once again. But still, let's have fun. We'll do the same thing. We're going to put right there today's high. And we're also going to say that this one can be a nasty stock. Low volume could be volatile. That's why I like to give myself notes. No man's land on that one. Yeah, I would love to see another day of setup on that one. It's not bad. No man's land, no man's land. Not going to chase. Need more time. No man's land. Rolling over. Would have been interesting coming into today, but broke through and closed below that moving average. I'm no longer interested in that one. Nice rounding bottom there, but a lot of volatility. Starting to get into the ones that are now. Ooh, that's kind of interesting. Pixie dust. But I'm going to tell you what, 20,000 is just not going to cut it. For whatever reason, the day it was doing good volume, it was doing 1.5 million, but this thing has dried up. No, stay away. Not interested. Bled through all the moving averages. Looks like it was purchased and bought out, not going to do anything. No man's land, got ahead of itself. You know, you could make a case for that, but I'm going to pass. I think we've got 4 or 5 decent ones. We'll see what we come up with here. Starting to get into the ugly stuff. We already marked that one up, didn't we? What's this one? Trill. That one's kind of interesting. I'm gonna do. Let's make this one our last one. We'll do above right there. 2 million shares today. Decent volume. All right. So while I get ready to bring Scott back in to make some announcements on the upcoming test drive and whatnot, let's hand out the price alerts. So 1, 2, 3, 4, 5, 6, all longs, no shorts. Go ahead and share these 6 selected. Copy all. And we'll drop those into the chat window as this week's price alerts. Again, not a lot of conviction on a lot of the stuff, the way we talked about the market being a little bit in thin air territory up here and possibly needing a bit of a correction. And if that happens, then a lot of the stuff won't work. So always look at the backdrop first. How do you get Holly history? Real simple, Bill, right click and go to history. I was on a time frame, now I'm gonna go back to real time. On the time frame, you can determine how far you wanna go back. It's kind of cool if you're good at taking data, because you can swipe your mouse like this and go Control C and then Control V, paste it into a spreadsheet, and you can look at data in a different manner. All right, so that's all we have for you today. Let's bring in Scott for a couple of announcements, it looks like.
Yeah, thanks, Steve. Thanks, Andy. So as Steve already mentioned, we've got the test drive coming up first week of February. Check it out. You get to try everything out with real-time data for just $8.99. That covers your exchange fees. Just go to trade-ideas.com/test drive. Sign up for that. Gets you in. Also, free eBooks. trade-ideas.com/setup. Both Steve and Andy contributed chapters to these. They're really helpful. The ebooks also contain cloud links to let you drop some of their setups into your Trade Ideas profile for your layout. So do check that out. It's free. TradeIdeas.com/setup. We got a podcast. New episodes coming out soon for season 3. Get prepped for season 3 by going to whatever you listen to your podcast in and searching for Trade Ideas Podcast in your app, and just click on the subscribe link. We've got a discount code that's good for the rest of this month. New TOW, NEW TOW, all caps. It's case sensitive, but it saves you 15% off your first month or year of any Trade Ideas subscription or upgrade. So if you're on standard and decide you want to upgrade to premium, just do that. You can follow Steve on Twitter at TodayTrader. We've also got at Trade Ideas and some other handles, so do check those out. On Facebook, we're facebook.com/TradeIdeasPro, so share everything we post with your friends. And any questions, email us, info@trade-ideas.com. It goes into our help desk software. It's the best place to send any of your questions. Thank you, Steve. Thank you, Andy. Thank you.
Yep, see you next time.
Thanks, everybody. I'll see you on Thursday.
Thanks all.